host Alan Porter. Alan, what's going on, man? How are you?
Oh, doing good. It's very, very cold here in North Carolina, just like the whole East Coast.
And that's the thing. It's cold, but I guess for you, it's been a good week, right, Alan, so far?
Oh, it's been a great week, especially yesterday.
Yeah, exactly. Definitely an opportunity for businesses to make lots of money and things to change. Appreciate you coming on, Alan. And I'm going to talk about today's title with you in 1 second. But I really think that ultimately, at the end of the day, this is going to be a big year for businesses 2025 if they connect with people like you, Alan.
Well, I'll tell you what, I can save them a lot of money in taxes, and I can also save them a lot of money in the way they operate their business.
All right. So our title today, and I was thinking about this, Alan, is prepare now to make April 15th less stressful. Alan, is this a good subject to talk about? Because everyone seems to be stressed about tax time.
Well, I even stress about tax time because I hate paying taxes, but it always falls on the 15th of April, unless it's a weekend, and this year it's a Tuesday.
Okay. Alan, does the IRS offer free tax preparation?
Well, they do, but it's only available in 24 states, and it's limited to people with limited income, and it's called direct file.
What are the top tax brackets this year, Alan?
Well, always remember for singles, it's less, and for married couples. But the limit for, and I'll just go with the married couples. I don't want to bore you with a bunch of numbers, but for married, uh, it's 10%. And we have a progressive tax system, okay? So it's 10% for anything less than $23,200. And then it's 12% for income over $23,200 up to $94,300. Now, understand this. Let's say that you make uh, $30,000 as an example. Well, your first 10% is taxed at the 23.2, and then the last seven or 6,800 is taxed at the 12%. So your effective tax bracket is probably about 11%. We have our minimum tax brackets, then we have the effective tax brackets because we have a progressive tax system. For anything, 24% is over $201,050. 32% is anything over $383,900. 35% is over anything over 48,700, excuse me, $487,450. And then over 37% is 731,200. Now, one thing you need to understand about these tax limits, especially when you're doing a Roth conversion or something like that, because if I can get a lot of money, as an example, you've got the 12% that goes up to 94,300. Well, the 24% goes up to $201,050. So basically, what that means, if you've got a large IRA that you're willing to do a Roth conversion on that or a 401k, look at that. That's over $100,000 of extra money that you put in at just a 2% increase in your taxes. But then it goes from 24 to 32%. Now it's another hundred and some $1,000, but that's an 8% increase. So that's not what I call the comfortable uh, division between tax brackets. But if you're between the 94.3 and the 201.50, between the 20 and 24 or 22 and 24 tax brackets, that's a good strategy for you.
Right. Absolutely. And if you can get back to the 22%, that's the best thing, right? Potentially.
Absolutely.
And that involves businesses as well and specific things. Alan, what is the standard deduction now?
Well, for a single, it's 14,600. For married couples, it's 29,200, and seniors over 65, it's an additional $1,550 for married couples and $1,950 for single.
Alan, are there new tax deductions?
Well, no, people think there are, but there's no new tax deductions. Now, people who itemize now they can take $10,000 in property taxes, sales taxes, or income taxes that they already had paid, but vast majority of people don't even pay. Excuse me, they don't itemize their deductions. They just take the standard deduction.
What about Social Security tax limit?
Well, this is crazy because it's right now it's 6.2%. If you're self-employed, it's 12.4%. And Wages higher than 168,600 are not taxed for singles, and it's 200, I think 220,000 for married couples. But what gets me in retirement, and I'll give you a quick story. If you're married at age 65 and you make more than $44,000 a year in outside provisional income, and you're paid $3,000, you get $3,000 from Social Security. Basically what that does, that's going to put you in the 12% minimum tax bracket, 10.13 effective tax bracket. If taxes don't go up, because you're paying taxes on 85% of your Social Security, if taxes don't go up, you're writing a check to Uncle Sam for over $6,000 a year. And it also affects the means testing for Medicare Part B, which will be in the thousands of dollars per year. And people don't know this. They're not prepared for this.
Okay. It's a very, very interesting thing. I mean, Alan, taxes can become difficult. And that's why you need an expert on your side, Alan, because I'm getting in here and I'm like, wow, thinking about this, especially self-employed, double that Social Security. That's unfair, right?
Yeah.
For self-employed. Why do you think ever that'll change?
Well, I doubt it because Social Security is scheduled to run out of money in 2033. And they've got to do something because 60 or 50% to 60% of people need Social Security as their primary source of income in retirement.
What
And
are
that's
the
pretty bad because that's
yeah.
poverty.
Yeah, so this is what you want to tell us people to start contributing, right? That'll help decrease their taxes. What are the new 401k and IRA contribution limits?
Well, the the for single, excuse me, for 401ks it's $23,000, and for IRAs it's $7,000. But the thing is about this, I ask people, I said, why do you contribute to your 401k or IRA or anything like that? The first thing they tell me, well, Alan, it's a tax deduction. I said, no, it's not a tax deduction. It's a tax compounder. And if you don't think taxes are going to go up in the future, I got some mountain land in Florida to sell you.
Because at one point you got to cash it out, and then you're going to pay Uncle Sam a lot more with the taxes.
You're absolutely right because you're going to pay taxes on whatever level the government says. That's like me writing you a check, uh, and then I tell you you don't have to pay me back until I tell you to, but you're going to pay the interest that I tell you at that time when you write the check back to me. Now people aren't going to do that,
Do
but
you think our yeah.
people need to be educated on things like that because it's great to get a tax deduction, but a 401k, we've gone over this before, 1% fee in a 401k will reduce your income by 1/3 over a 30-year period. And the average fee in a 401k is 2.99%. That's by Forbes magazine a lap time. And people are going to have less than half of their money and they get hit with taxes anywhere from 20 to over 55%. And they're not prepared for that at all.
What about HSA account, health savings accounts, Alan?
Well, it's pretty good. Right now, it's 4150 for singles and $8,300 for a married couple. But the great thing about it, it's a tax deduction, and even if you uh, leave the company, you can still use that money. And when you're 65, you don't even have to use it for medical purposes. But it's another great way to get a tax deduction um, and just help protect yourself against the high cost of healthcare.
Alan, what about the child tax credits?
Well, it's $2,000 per qualified child. That decrease, if you're AGI, your adjusted gross income is above $200,000 for single and $400,000 for married couples.
Wow. And this is interesting looking at all these child tax credits and specific things. Are things going to change under the Trump administration? Or can new tax laws be written for next year, 2025?
Well, I think what they're doing is if Trump had not come into office, the taxes were going to go back to what they were in 2017 under Obama. And some of the people in the 12% tax bracket would be moved to the 22% tax bracket. Now, not everybody, but that's a huge, no, actually, it's a 25% tax bracket. Not everybody, but even a few, that's a 100% gain or increase in the taxes. So there's going to have to be doing some large thinking. And I'll tell you what, he's got some great plans for the American public. Uh, just some of the things like the external revenue service,
Yeah.
finding all these companies and these countries that owe us so much money and they're not getting, we're just letting them get by with it. But he's a great businessman and he's got some great ideas.
All right. Alan, what is the difference between filing as a single or a head of household?
Well, this is something I really wasn't quite well. I was aware of it, but you can file single or head of household if you also maintain that house with a child or a relative. But you've got to qualify for it.
Oh,
Just don't think that you're single, you're head of household. No, that doesn't work.
that's quite interesting. Alan, where can I find a tax estimator?
Well, there's basically four places: the TurboTax, NerdWallet, AARP if you're a member, and then H&R Block, of course. They're always here, H&R Block.
Guess where else, Alan? I have to contribute to this. Okay. Is that all right?
Sure,
AI.
that's true.
You literally can have your own chief financial officer using AI and accountant to a certain point to have a lot of your knowledge already done for you. So that's where you can put together financial statements, do all these different things, especially if you're a business. They literally would have cost you a lot of money. So
Yeah.
something to look at when you're looking at your estimators and say, how much am I going to pay? AI will come up with it pretty fast in your state fast. So it's another one to look at. I'm sure those companies don't want to hear me say that, but Alan, that's not going to hurt you at all because you're the expert that has a series of experts to kind of really delve into things that you're not going to find on the World Wide Web. That's where AI pulls everything. That's what people don't understand is AI is pulled through the World Wide Web. It's just they are able to find things online much easier and faster than we used to do with Google. So, all right, Alan, how should I expect to receive my tax return?
Well, if you file electronically, you should receive it approximately 21 calendar days. And if you do a paper return, it's going to be 4 weeks or more. But let me reiterate, make sure that you pay all the taxes that are due. Even if you think you're getting a refund, uh, pay your estimated taxes because if they come back and find out that you haven't paid enough taxes, it's a penalty. And one other thing I asked people, I said, because they're always looking forward to getting their tax returns. And I asked them, I said, well, why would you give the government money for them to grow interest on your money when it should be growing in your account?
Exactly.
I mean, just make a quarterly payment for your taxes, but adjust your withholding so the government's not keeping your money.
And you can invest in other things like cash value life insurance. That's why you got to
Yeah,
call.
you're right.
That's why you got to contact Alan because Alan, that's another way for saving businesses, especially for 2025. Is go ahead and it's going to be a big year for you. You need to talk to Alan today because it's going to be a big year for everyone in 2025. I feel it.
Well, it's just like we've talked before, Neil. The insurance companies have the best IRS approved. I can't say IRS approved. I got trouble with that one. Tax code approved, tax-free retirement system available today that far exceeds the 401k and it mitigates or eliminates the risk in retirement that a stock portfolio will only compound.
All right. Best place we can go, Alan, is strategicwealthstrategies.com. You can also email you at strategicwealth, the number 0 at gmail.com, or just call them right today at 910-551-1046. Appreciate it, Alan.
You bet. I want everybody give me a call. I've got different strategies. We're recovering $1.83 million for this businessman that he's paid over the last 3 years, and we're recovering all of that, zero cost to him.
Alan, you're the man. All right. That was the Strategic Wealth Strategies podcast, guys. Take care.